Hello and welcome to another update video. Today we talk about ENQ, that's the ENQ USDT chart. We're currently looking at this chart on the 4-day chart here at the moment. Very important to understand that I tend to ignore the beginning here. It is basically the startup stuff, and we've then made a significant low, and this is really where it starts for me. I'm looking at this and say, okay, the move to the upside was clearly a 3-wave move. Okay, I have a 3-wave move, not a 5-wave move. The reason is it can't be 5 waves because it made a new bear market low. Yeah, until then I could have said, okay, maybe we have a 1, 2, 3, 4, 5 with an extended fifth, but it clearly has become an ABC structure that gives us clarity further along the way. You can see that I'm counting this as an ABC structure to the upside because, first of all, the subwaves align with that view. And then if I'm looking at the Fibonacci extensions that take the length of the A wave, go to the low of the B wave, we perfectly reach the 100% extension. That's a very common target for a C wave. And it could have become a 5-wave move, but then it should have held the 78.6 retracement on the way down, which it didn't. Obviously, it's the first time I analyzed this chart. So we're looking at a 5-wave decline. It has to be a 5-wave decline, which is not good for this chart. It has to be a 5-wave decline because it made a new bear market low. Yeah, I could even argue that this is already a 5-wave decline, but we have to ignore the start because it is very illiquid. It is sort of unreliable startup candles. You cannot do a clean wave count, so you have to start somewhere. Okay, so for me, the view is that this is a wave 1 to the downside, a higher degree wave 1. After it rallied in an ABC structure, which is never good, yeah, it came down in 5 waves, which is also never good. It is certainly not bullish, it is bearish. So only having 3 waves to the upside is not necessarily a major problem. But then price needs to prove that it can hold a higher low on the way down, and it didn't. So how do we look at this? So I'm looking at this decline of the April 21 high as a wave 1 to the downside, which bottomed on the 21st of May 21. A wave 2 pullback to the upside. Yeah, wave 2. Just checking something, but yeah, this is a wave 2. Let me just double check something. Yeah. Wave 2 here. This wave 2 obviously came to basically the same height. So we can debate, is the wave 2 here or is that here? But it doesn't make a great difference. So having a wave 1, a wave 2, and then a yellow wave 3 down, which bottomed on the 13th of May 22. So a very long third wave. A third wave is often the longest wave in a decline or even in an uptrend. The most impulsive wave, which in this case is subdividing into 5 subwaves, highlighted in blue. We then had a wave 4, which peaked here with this candle on the 17th of May, and then a wave 5 to the downside, which bottomed in August 22, so far the bear market low as a wave 1. So after that, we have a very clear 3-wave move to the upside. You can see it's not 5 waves, it is 3 waves only. It failed to hold a higher low. And also here, this move up was not high enough. So it's a clear 3-wave move. The wave W in 3 waves. The wave X is a connecting wave. And you can see here we have a 3-wave move as well. I can go to the daily chart. We see that in a little bit more detail here. W, X, Y. Certainly the wave W in a crystal clear 3-wave move. Yeah. The wave X is the connecting wave. And then here as well, A, B, C in a Y wave. Yeah? So we have a 3-wave move up, which I call then a wave 2 because the wave 1 was 5 waves, made a new bear market low. The pullback is in 3 waves, so I have to call it a wave 2. Let's double check which retracements it actually reached. 50% retracement, the area between the 50% and the golden ratio. It's perfect for a wave 2. Okay, so it's a very reliable wave 2 at this stage. Yeah. And now we deal with, so we now deal with a few things here. So I shouldn't label that ABC. 1 second. Now, obviously, it's heading down further. So we can call that another wave 1, a wave 2, 3, 4, 5. Let me just adjust that. So yeah, it should be like that. So the idea is now that there is a chance that it completed here another wave 1 of wave 3 after larger wave 1 finished here in August 22. Because we can count it as 5 waves down. So it might now start a pullback in a wave 2 before heading down further. You saw it on the chart. I labeled it ABC. That's also possible. Depending on how I count it, I can also count this wave 1 as an ABC, A, B, and then C. So it's an entire diagonal pattern, making it a little bit less reliable, but that's more academic. It's more important on the way down, further along. Not so important. There's no way of saying, okay, it's either this or that. I think they both have their place and it doesn't change targets or anything, especially not in the short term. So yeah, the idea is wave 1, wave 2, and now we could have here the subwave wave 1 complete of wave 2. Let's measure the Fibonacci extension. So if I measure the length of that larger wave 1, compare that to the length of the smaller wave 1. So it reached a 38.2 extension. It could ideally stretch a little longer, that wave 1 here in yellow, but it is okay. It would be more reliable if this wave 1 in yellow would go below the white wave 1. That's at 0.004, but it's okay for now. I think we might have started a wave 2 pullback. Again, the wave 1 can also extend a bit. We won't really know that wave 2 has started until price breaks above this blue wave 4 high, which is at 1.5 cents. So far, certainly only a 3-wave rally to the upside. Okay, so it's not a 5-wave move or anything here at this stage. So I would think that you could play it as follows. You could say, okay, against this low, which was made on the 11th of June or 10th of June, the focus is now on higher in an ABC structure in a wave 2. That's, however, very risky because the overall trend is down. So if you go long here, you would work against the higher level trend. Another way of trading this would be to go short with a stop at 6 cents, roughly above this wave 2 high. It's just a suggestion. Obviously, we're far away from that resistance area, but if we go closer, it might provide a more interesting short trade. And obviously, if it breaks above that level, then we would need to revisit the chart, looking how the structure is looking like, but it would most likely not make it bullish because the move up here was just in 3 waves. So what could happen then is just that we get an extension of the wave 2. That would be my alternative. So if something like this happens, then it would likely just be a larger 3-wave move in wave 2. So it would really need a lot of work to make this chart bullish. The problem is it's not easily possible because this move up was in 3 waves. This move up was in 3 waves. It is very hard to create now a new impulse to the upside from here. Okay, so it is quite a bearish chart. So the long-term prospects are very nebulous. Okay, so yeah, and if we get a wave 2 pullback, I can give you the resistance area for the wave 2 pullback based on the condition that the wave 2 started. I have no strong evidence it has, but certainly I can count this yellow wave 1 to the downside complete. So there is a case to be made, right? And resistance here would be between 1.9 cents and 3.6. Then I would pay some attention to that resistance area for a possible reaction to the downside in the 3rd wave, then the 4th and the 5th, and eventually this coin might die. I'm not telling you it will. It can always turn bullish, but it would need a lot of work. And at the moment, the trend is clearly down with an impulse to the downside, a correction to the upside. Also here, the latest correction to the upside in 3 waves, the move down again in 5. Depending on what it's doing here, it could also become a 3-wave move again, and then the follow through to the downside. Yeah. So if it really takes out the August 22 low, I mean, then I think it's going to flush down. Until then, yeah, it might fight it. It can always rally in a corrective fashion, but you don't really have the bullish long-term prospects here at this stage because it made a new bear market low. Okay, it's now trying to hold a higher low. It does. So let's just draw the fib levels. The problem with that is it broke briefly below the 78.6 retracement. Okay, it did hold it eventually, so it's not too bad. But whenever I see something like that, it's not good. And the last rally was in 3 waves only, which is also not bullish. And obviously this rally was in 3 waves. So how can I trust a 3-wave move up and a 5-wave move down, a brief break below the 78.6 retracement, and in the very short term here again, a 3-wave rally? Yeah? This is not an impulse. It might be, again, it might be a diagonal, but it's just not taking the context into consideration. It would be very forced. It would be very forced. I mean, the very short term, yeah. Is this already the wave A? Maybe, but it's not. Let me see. Oops. It would depend on the Fibonacci extension levels. Can we, what is realistic? Obviously for a C wave, the 100% extension would be likely. Yeah, it's probably not, because we would only reach, with the 1.618 extension, we could reach the 50% retracement. So I cannot rule out that this is already the first wave of this wave 2. Yeah, maybe as an A wave. But then if I look at how long did that wave 1 take, okay, I mean, it started in November. It's hard to believe that within a few days this A wave is complete. So I'd rather say not. This should really stretch out over a few weeks. A wave could still stretch a bit higher, then a B wave down and a C wave up. Yeah, I think the bottom line here is, first of all, it's not a super reliable chart. It is a chart that is in a downtrend. A corrective move up is currently possible against that 10th of June low into the region between 1.9 cents and 3.6. If we break above 3.6, it will reset the larger wave 2. So that could go a little higher. I can give you a fallback support area, resistance area for that. So what happens if this white wave 2 is going to be reset? What would be the alternative resistance area? Price could then go a little higher. Let me put it onto the chart. So this would be the alternative alt wave 2. Yeah, in case it has to be reset, which is absolutely possible. Possibly all the way up to 15.8 cents. Now you can see this certainly can rally quite a bit, right? Let's assume we go back into a bull run. It might rally substantially. I mean, we're not even at a cent now. And if you imagine, okay, it could go to 7 cents or maybe even 15.8 cents in a more bullish scenario, but still bearish. That is still substantial, but it may never make a new all-time high. And it just is fighting against a high level trend. At least that's what I can see at the moment. Structural resistance, by the way, on the way up here, this wave 4 high, very important, at 1.5 cents. Then this small spike there at 2 cents, which is basically in line with the 50% retracement here. Very important one is up here at 5.8 cents. But all of them, taking them out wouldn't necessarily be bullish. Where it would get potentially bullish is above 15.8 cents. Yeah, but also the structure would be important. I would need to see an impulse and not just a corrective move up. Yeah, I think that is sort of the analysis about this chart. So it's tradable on the short side, I would rather say, but against this current wave 2 high. But be aware of reward to risk here, and you're currently far away from that level. But the closer we get, it might open the door for a potential short trade. Just an idea from what I can see now, no financial advice. And yeah, besides that, I don't think there is much more to add. There is not even a way for me to calculate an all-time high target because it didn't create an impulse to the upside so far, rather to the downside. Okay, and this might eventually go to 0 if it goes bad. It doesn't have to, but if it goes bad, it will. Yeah, that's my update about ENQ. Hopefully you liked the update. Thank you very much. Bye-bye.